Okay, let's get ready to start on the financing side. Next slide. Okay, how to make it through the loan process. This is where a lot of people get very nervous, and I totally understand. To me, when I went out to look for a loan, it was like going to a police lineup naked, and that is not pretty. So henceforth, I developed a lot of loan programs along the way. I've owned 9 businesses, and I needed capital. So I wanted to develop a loan program that was easier for the next guy. And that's how I came to what I'm doing today. It was 20 years ago. I've funded 41,000 businesses across the United States, all walks of life. As someone said to me the other day, well, I don't know if you'd fund my business. And I said, well, I funded a clown. So nothing is out of this world, except if it's illegal. Okay, I can't do illegal things. People have been asked for that. Can't do that. All right, next slide. Okay, do we have any questions yet at all? Okay.
No questions yet in the chat.
Okay, perfect. Okay, the preparation. This is key. It's like painting. The easiest part is putting the paint on. The hardest part and most time consuming is getting it prepped. And so we're going to talk about prepping to get you ready for a loan. All right. If you're a brand new startup, you're going to have a business plan. All right. And there's business plan classes that you can take. I know the city of Austin offers them. So feel free to take that one. If you're already in business, just an executive summary is needed. The key points on both of these is what type of business it is, who your competition is, and don't tell me there isn't any competition. I don't care if you have to find the competition in Seattle. Put down some competition because it shows you've done your due diligence. Also, how you're going to market. This is key right now because the world is changing very quickly. There's a lot of modes of marketing and methods. So please put down how you're going to market, because when you market, that means sales, that means revenue, that means paying the loan back. So please put that, hone in on that. Just don't put it off to the side and give 2 sentences. Put a little bit into that. Also, your background, how you have the skill sets to make this project work. Because remember, they're betting on you. So make sure you talk about, you highlight, let's say if you want to go in the restaurant business, you worked in it when you're 16, 17 years old, put that down. You have restaurant experience. It's when all of a sudden you come out of, let's say, the tech industry and want to start a restaurant because you have your grandmother's pancake recipe. You have to build a bridge to tell the reader why you're going to be successful. And keep it on point. A lot of business plans, when you buy the business plan kits, they repeat themselves 4, 5, 6 different times and just change the color of the graphs. You don't need all of that. Business plans need to be succinct and to the point, because you're telling the reader how and why you're going to be a success. Okay, so that's a key point. Understand the reason why you need the loan. Just don't say, well, I need $300,000. Well, why? Well, because I think that's what I can qualify for. That's not what you want to do. You want to talk about how the funds are going to be used, how they're going to make you a success. All right. And don't have a whole lot in working capital. Break down the working capital. Then, and determine how the loan will help you. Will it help you start your business? Will it help you get first and last month's rent? Will it help you hire people? And then talk about hiring people, because that's kind of what everyone wants to see in here. You need to know who your audience is. So you don't have to hire them today, tomorrow, but let's say you can do it in 2 or 3 years. This is how you're going to grow. And this is who you're going to hire and how many people you're going to hire. And then here is the extra that you have to put on due to the pandemic. If you're already in an existing business, how you survived the pandemic, what you did to pivot, how you were able to keep the resources coming in, keep the business open. If you shuttered for a few weeks or months because you were told to, what happened when you came back on, how you are able to establish your business and start bringing in revenue again. Because remember, the overall goal that your audience wants to see is how you're going to pay the loan back. So talk about how you were able to pivot and able to see things rather quickly. And then you also need to talk about what the safeguards are that you have done to make it safe for you, your employees, and your clients coming in. So that's huge right now. That's new, and that's really looked at. Next slide. What if we started in the pandemic? That's great if you started in the pandemic, because you're going to talk about why you started in the pandemic, how you were able to start your business in the pandemic, how you were able to adapt to the new marketplace, and how the business is moving forward and is on track to generate the revenue that you projected during a pandemic. That's huge, because that shows you've got the wherewithal to do it. Then highlight that, really highlight that. Paperwork, is it all the same? Most of the time it's the same. Lenders have their own forms. And then on the SBA side of it, the SBA has their forms. And then there's a hybrid where they combine the two. That's very common, where you're going to see the lender's application and then all the SBA forms behind it. 9 times out of 10, that's what you will see. And they're pretty standard forms. They're going to ask you, your name of your business, all your personal information, and then about the business. Okay, next slide. Okay, what are the traditional lenders seeking right now? It's all about cash flow. So if you're a startup, you're going to do 3 years of cash flow by month. I'll be more than happy to share a template with you after this if you want to send me an email. So you're going to show that the business is going to be profitable. They're no longer are they going to carry a business 12 months without profitability. Those days are gone. Times are changing all the time. So they're going to look at the business's cash flow to see if the business can service the debt. That's the key. And there's a formula to it. You've got to be able to show 115% debt coverage on this. And if you have outside income that comes in, is that we can look at that. I saw the question, is there a minimum credit score? In this marketplace, there is a minimum credit score. And underneath SBA, they use an SBS score. Now, if you're already in business and have been in business 2 years and longer and have a cash flow going, that's also looked into it. But if you're a startup, they really look at your personal credit. And the reason why is they have nothing else to go on. So what they want to see is that you pay your obligations on time. That's the key. So if you have, if you're behind on your credit cards right now, bring them current. You're going to have a minimum of 6 months of current credit cards. If you had a foreclosure on your home, it's got to be way in the past. If you've had a bankruptcy, it has to be a minimum 1 to 2 years in the past, and you had to establish credit elsewhere first and had to pay every obligation on time. We understand that in life happens, and sometimes the only way out is in bankruptcy. So we get it. So, and the laws allow you to have it. So you just have to be current from the time you declared bankruptcy. And you can't apply for a loan if you're in a bankruptcy reorganization, because technically you're still in bankruptcy. So you have to be out of that totally. I get that question a lot. All right, so the business is borrowing this money. So the loan is in the business name. If anything happens to the business, you are personally guaranteeing the loan. There's no way around it. You're the CEO and president. So that's why they look at your credit score. And so, as I said, it has to show that you pay your bills back on time. And how will they, and how they are managing 2020, because they're really looking at the back end of 2020 on your financials. If you're already in business, they're going to want to look to see what you did, what happened when the business stopped, and how it picked up after. So you're in Texas, so you kind of got lifted early. You weren't as locked down as a lot of states. So they want to look to see what your financials were in 2020. And I know you're not going to like to hear this, but one thing about me is I'm very honest. They're not going to let you have a loss in 2020 in your business and get a loan. I'm so sorry to say that, but they're just not going to, because they're fearful of another pandemic coming and seeing that the business can have the wherewithal to get through it. So you've got to show positive net income, business net income in 2020. Any questions in there that I missed? Okay. Next slide. Okay. Here are some of the additional items they're going to look for. If you're a brand new business, they're going to want a cash injection in the business. They won't do 100% financing anymore. So what they're looking for is between 10% and 20% of a cash injection. That means it has to be in a checking account or a savings account. It can't be in equity in your home. It has to be liquid. Now, if you're taking it out of your retirement or selling some stocks and bonds, you have to pull it out of there towards the close of the loan. So you keep it in there as long as you possibly can. Okay, collateral. I'm asked this question all the time. Underneath SBA, they want to see dollar for dollar collateral. Now, what we try and do is look at the business's collateral. Prime example, we're funding a loan today. What we look for is the vans that we're going to buy and use that as collateral instead of looking at your personal collateral, because we could get dollar for dollar on the vans. Also in a brewery that we're working on, we're looking at all the collateral in his equipment as the collateral for it versus looking at his home. So those are kind of the things that we try and do. But if there's nothing else, we're required to look at all the collateral to make the loan 100% collateralized. But if you don't have collateral, that doesn't mean you can't get the loan, okay? So a lot of people don't have collateral. That doesn't mean they can't get the loan. So there's ways we can work around that. Track record in business. If I got a PPP loan, will it hurt my chances? No, it won't, because if your PPP loan is probably going to be forgiven, if you keep track of all how you spent that money, what they will do is they will put that PPP loan in the debt schedule to see if the business can service the debt. But remember that PPP loan has a 1% interest rate. So it's not going to make that much of a difference. And we all know, because we're just up to our eyeballs in PPP and EIDL, we know that that's probably going to be forgiven, or the majority of it's going to be forgiven. And if it's under $150,000, the forgiveness process is so much easier than anything that's above $150,000. So the only time that will come in is on the debt coverage if we need to look at that. But as I said, it's 1%. Track record in business, how successful you were in business. If you're coming out of a corporation, talk about on your resume what you did in that corporation and how that skill set moves over to this business if it's a startup. And then resumes of all principles. This is key. I've said this now 2 or 3 times, is build that resume to match the skill sets that are needed in this business. Prime example, I have a gal that just came out of the military. She wants to start a retail store. Prior to the military, and when she was in high school, she worked at 3 or 4 different retail stores. So on her resume, yes, we talked about the military because she just came out of it, but we talked about all of her retail experience. She definitely has it. So it's not a huge learning curve as she goes into this business. So some of the things you need to do. All right, next slide. Okay, additional documentation. Ownership information. If anyone owns 20% or more, they have to be on the loan. Now, if you have shareholders or owners that own less than 20%, you just have to list them. Had a company in Charlotte where I think he went around to his apartment complex and got everyone to invest because they had 0.5%, 1/10 of 1%. We just had to list it all to equal the 100%. That's all. But that doesn't mean that they have to be on the loan. It's just people that own 20% or more, Or let's say you own a restaurant and you own 90% of it, and then somebody else owns the other 10% of it. But if you have a chef that has a material influence in the day-to-day operation of the business, there's a chance that that chef will have to be on the loan. So anyone that has a material influence in the day-to-day operation, there is a chance that they would have to be on the loan. In fact, I had one in Austin where they had come on the loan because the owners had absolutely zero experience in the business. But the person they were bringing in to manage it had all the experience. Cash infusion and cash injection, that can be a gift. If you don't have the 10% or 20% to put in as your cash injection, that can be a gift. So there's ways to work around that. We talked about the collateral, the business plan, the financials. Now, if you have a lease, we need a copy of the lease. If this loan proceeds are to be used to sign a lease, the first and last month's rent, don't sign the lease until you have the money in your account. What you want is a letter of intent to lease that property. And landlords know all about it, and real estate agents know all about it. They deal with it every day. The personal guarantees, I already spoke about. Any other pertinent business items that you have that magnify how terrific you are and why this business is going to be a success, include that. If you have already put together some marketing material, include that in there. And then, of course, the COVID and pandemic policies of how you're going to be able to survive during a pandemic, what you were able to do in the past, and if another one comes, how you're able to cope with it. Did I see any new questions? Xavier, do I have any questions in there that I've missed?
Nope, I think we've got them covered for right now.
Okay, perfect. Next slide. Okay, what if I say no? Everyone likes to say no. It's so much easier to say no than yes, okay? So don't take it personally is what I want to stress here. It might be that the underwriter or might be having a bad day, might have hit too much traffic going down through Austin that day and was late for work, or their portfolio might have too much of the same type of business in it. So they've got to diversify their portfolio. And what we're finding right now is a lot of these loans have been in deferment and now they're coming due. And a lot of people are struggling to bring them current because a lot of their contracts are falling apart. So don't take it personally, because there is a lender out here that will help you. You might just have to knock on a few doors to find it, but that's okay, because there's appetite out here to put money on the street to make businesses a success. And a lot of lenders need to put money into businesses because that's how they make money too, on the interest. So just because you're told no once, don't take it personally. I know it's hard. I get it. We're all human beings, but it has nothing to do with you. We're going to turn it around so it says yes. We can always tweak things to make it turn around to say yes. Next slide. Okay, here's the lending trends and options in 2021. Does every application show up as a hit to your credit? I wouldn't let them run your credit. What I would do is I would go to Credit Karma or annualcreditreport.com, pull down your credit score, because if you take it down, if you pull it, then it's a soft pull and it doesn't affect your credit. So have your credit score with you. I always tell my clients, have your credit score, and you don't let that credit being run until the very end, until you know that they like the deal, they're going to process the deal, because the bank runs a credit, and if you go through an SBA loan, the SBA loan portal runs a credit too. You can have those two combined, so it's a one hit. But yeah, take your credit score with you. Next slide. Okay, here is the state of where we are in right now. The skittish, to be the word that comes to mind right away. Remember, banks are heavily regulated. They are conservative because they have your money. Can nonprofits get lenders from a different state? Yes, you can. A lot of nonprofits that are very active in the nonprofit business are in different states. Any organization you would suggest to repair your credit? A lot of people go to Lexington Law. I've never been there, but a lot of people go there and have had success with them, and they've been around a number of years. So I'm assuming that they're legit, and I've seen results from them. So that's the only one that I know, because there's a lot of shady guys out here. Okay, state banks are heavily regulated because they have your money that they're loaning out. What if you have 100% on-time payments, but currently have some credit card data less than that? That's okay. If you're 100% on payment, shows that they're paying. They're risk adverse. They look at historical data. Okay, here's the thing that's driving me nuts. One thing about me is I'll just tell you what it is. All right, so let's say you're a business. You've been in business 2 years. Your historical data is showing that you kind of break even. However, during the pandemic, your business is growing and growing and growing. And now all of a sudden 2021 is here. We're in the month of May, and it's really taking off. But I want you to highlight how your business is really taking off and not always look at the historical data. So I want you to be able to say that when you talk to a lender. Look at where I am, what has happened during the pandemic, and where I'm going. Really highlight that. If you've just kind of been marginal in 19 and 20, okay, because that's when you started your business, and that's what's happened. And then all of a sudden the pandemic hit. But now 2021 is coming, and all of a sudden businesses are really seeing explosion because everyone's been in lockdown, and now they're out spending money and buying things and doing things. So I want you to highlight that. Payment, I want you to look at what your payment is, principal and interest payment. Look to see where, if you can afford it. A lot of people just sign things as they need the money right away and it's fast. If it doesn't work for your cash flow, don't do it. There's a lot of predatory lenders out here. When you see that rapid cash, call me now, I'll have the money in 24 hours. Be careful, that interest rate is really, really, really high. And then you get yourself into a pickle. Main Street's kind of been left behind. We're really pushing in these PPP. That was the goal when we were working on it, is to make sure that they didn't forget Main Street, because in the last recession, 2007, they took care of Wall Street, but forgot about Main Street. And what to watch out for in 2021, conservativeness on the lender side, and their negative type of approach. What about first-time businesses? What about new first-time businesses? Yeah, they're fine. You're good. You can do lots of them all day long. How can you start a business or expand a business without any money, especially start a business? So you've got to have the lending in there to help your business grow. And then I've spoken about COVID enough. Next slide. Okay. Other financing options. There is lots of different banks. There's more than one bank. There's a lot of community banks that really participate in their communities. So look at community banks, ask your friends who they liked that helped them out, and have it work that way. The SBA programs I'm going to talk about in a minute. Non-bank lenders. Okay, those are the ones that have the instant and the rapid finance. Here's what happens is they start you out small with an interest rate of maybe 20%, that's high, but 20%. But what they do is they debit out of your account every day. Some do it weekly. Well, all of a sudden they start seeing that you start getting NSF. So now they think, okay, we have to give them some more money because we have NSF. So they give you more money and the interest rate goes higher and higher and higher. And before you know it, you've got an interest rate of 150%. There's no way you have a cash flow to meet 150% unless you're doing something illegal. I mean, running guns, women, drugs, or something. The cash flow isn't like that. So be careful about those. I know it's very easy to get into it. I see businesses all day long that get into it because they need to meet payroll. It's a fast way to do payroll, but just be careful because their contracts are ironclad. I've been working with the Senate Small Business Committee and the House Small Business Committee to unwrap those. But I tell you, they hired really good attorneys because it is impossible to get it. What are the current interest rates? The current interest rate right now in the SBA is prime, which is 3.25 plus 2.75. So it's 6% in this marketplace. And remember, business lending is always higher than a mortgage because it's riskier. And on a mortgage or on a car, you're securing the loan to those two items. So business lending is always higher. A lot of people start with credit cards. That's fine if you're very, 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 very good at managing 0% interest, because that's what a lot of them will give you introductory. And then before the 0% interest starts, start looking for a loan to take that 0% out. And you're going to have to give yourself 4 to 6 weeks to do that. And make sure if you used credit cards to start your business, you kept the receipts that show that it went directly to business. Don't commingle it with your purchases at Target for tennis shoes or something. Keep it strictly for your business so you can use a loan to pay off that debt, but it's got to show that it went to your business. Vendors, a lot of vendors want you to get started in business because they know you're going to be repeat clients. So vendors also will fund businesses. I've seen it happen several times. Family and friends. If you use family and friends, make sure that you do it in a business manner. You have a written agreement. So they don't throw the turkey at you at Thanksgiving, that this is how much money they're giving you. This is when you're going to pay it back, or they're going to turn around and have it as an equity position in your business. So they own a piece of your business. We know about crowdfunding licensing products. I see that a lot of inventors come up with these great ideas, but they don't have the wherewithal to manufacture. So they license the product and then just get a check in their mailbox once a month. That's a nice way to do it too. Next slide. Xavier, does this end in an hour?
Yep.
Okay.
Yep, I have it scheduled till
11 a.m. here.
11 a.m. Oh, 11 a.m. Oh, so I have some time. Okay, so I thought it closed at 10, so okay. All right, these are other forms of financing that you can look at. The one thing I want you to look at when you go out for venture funding and angel funding, the time. The time frame tends to be very long with that. And I'm noticing if you go in an angels group, that's running on average right now about 9 months is what I'm seeing across the country. So make sure you have enough lead time for that. And the other thing is when you go out after angel and VC funding, small businesses spend so much time chasing that money that they don't have the time, because you only have a limited amount of time each day, to work on their business. So it's a real balancing act to keep your business going and then keep the pitches going. So just keep that in mind. It's harder than people make it sound. Do you mean it takes longer to receive the funding from venture? Yes, it does. It takes much longer. Debt financing is about 6 to 8 weeks in today's marketplace. So, and what I'm seeing in angel funding, especially if it's groups, that takes a long time. Now, if it's angel funding from a personal person that you know, that you have a relationship with, then that will go much faster. Because remember, they're investing in you. So that will go much, much faster. But if someone doesn't know you, they're going to do their due diligence to make sure that you're the real deal. And you're going to put the money in the business. I've had one venture group gave this startup business great technology. They had a great background, stellar educational background with PhDs from MIT. When he got the money, the first thing he did is went out and bought a $125,000 Porsche. That doesn't go over very well. So can a lender be a spouse? If you're, yes, it can be a spouse. Absolutely, it can be a spouse. I've seen that happen several times, more than several times, but yes, it certainly can be. Are interest rates better with angel funding? On angel funding, it all depends upon what the term sheet is. Remember, he or she who has the money determines the rate. So that's all negotiable with your angels. And usually angels, if they give you an interest rate, usually they're giving you equity, although some do interest rates discounted. So yeah, I would look at it. Can you get women-owned business benefits if you're in a new venture with your partner? Yes. To be women-owned, if you have a male partner, it has to be 51% owned. The same with veterans, same with minorities, because they have to be the majority partner to get that. I'm sure we need to do the research ourselves, but by chance, do you know where we can start to, I don't know what the rest is.
So the question, Sue, is I'm sure you need to do the research ourselves, but by chance, do you know where we can start to look for angel or venture funders? Is there like a list?
There is a list. And if you're in Austin, Austin's a very robust community for this. So I would, yeah.
I can offer up that I believe the Austin Business Journal has a list of venture capitalist funding. I'm not sure if that falls within the angel capital funding groups, but there is a list on the Austin Business Journal that's available should you have a subscription or wish to do like a temporary subscription to access the list.
That's a very good point. And Xavier, on that is a lot of the venture funds, people participate in that. They're also angel investors on the side.
Mm-hmm. Sue, along that same line, one of the things that I always like to highlight for folks is what are typically the ownership terms with respect to venture capital or angel? Do I still get to keep 100% of my company? What do you sometimes see in those particular deals?
You're not going to keep 100% because they're putting money into it. Xavier, I've seen it all over the board. We're doing a couple term sheets this week, and it's all over the board. It depends upon where the business is. If it's pre-revenue, it's a different model. If it already has revenue, I mean, a lot of the pre-revenue, they don't know if it's going to be successful, so it's riskier. You're going to give a lot more away. But if you've got revenue, you've got a whole lot of clients, and you're on a steady climb, you might not have to give so much away. It all depends upon the amount of money and who you're negotiating with. And if you don't like it, if you don't like the terms, you don't have to take them. There's many other places to go to get the money. There's not a set standard, though, not at all. And also, there's not a set standard on valuation. It's crazy what I see for valuations. And people say, oh, my business is valued at $22 million. They haven't even had a nickel in there. I mean, how in the world do you know your business is worth $22 million?
Good point. Thank you, Sue. And just for the benefit of the audience, the Austin Business Journal can be accessed online through the Austin Public Library if you have a Austin Public Library card.
Wow, that's really nice. That's a nice benefit. Also look at a couple of things that I wanted to affect. On the lease financing, I'm seeing a lot of businesses going to lease financing because you don't have to put up so much upfront capital versus buying. Just make sure that you like the terms, that they benefit you. And if you want to buy out at the end for $1, or if you want to be able to replace it. But the key on some of these leasing contracts is make sure it just doesn't keep extending the term of the lease, so it goes on forever and ever and ever, that there is a way that it stops. So make sure you look at that. And then that slide's pretty self-explanatory. All right, now we're going to go through steps by steps because really SBA was set up for small businesses, especially for startups. And in this marketplace, it's really the only place at this point in time, unless you have family and friends, for capital, because of how it's set up where the SBA has a guarantee behind it. So it mitigates the risk to the lenders, and that allows lenders to make loans to startups, which are considered riskier. A lot of people get confused and think that guarantee goes to the borrower or the applicant. That's not the case. It's a guarantee to the lender that if the applicant or the borrower fails, that the SBA will make the lender 80% or 75% or 50% whole again. So there's a really big misnomer out of that. People say, well, SBA's giving me 85%. Well, it's not giving you 85%. It's guaranteeing the loan will be paid back. And if not, the lender will get 85% of the money back, so they'll make the loan. And there's a lot of back end work that the lender has to go through. So I need my coffee. Okay, next slide. All right. It was established to help them. It helps mitigate the risk because it's all about risk. SBA is a cash flow lender. That's why in the very beginning, I said, put together 3 years of month-to-month financials to show the business has a cash flow. And then we're going to talk about the stimulus money. We're going to go into that in depth. Okay, next slide.
And Sue, real quick before we get too far out, there's a question from Gina. Lease agreements can be confusing. Will you cover this?
Each lease agreement is very confusing. I was an expert witness on predatory leasing in a court case that had to go all the way up to the Ninth Circuit and all the way through. Each one is a little bit different, but what you want to look for is if there's any extension, if you call in for repairs or if you add for anything, that they're not extending that lease for another 3 years. Make sure you go to an attorney to make sure that they read the fine lines. Also, look to see what the buyout is on it, and look to see what your monthly payments are for what you get. And what happens if it's a lemon? Are they going to replace that? Is that going to be replaced, or do you have to keep paying on this? So I highly suggest when you see a lease, you go hire an attorney for $150, $200. It'll be because they can do it in an hour. It'll be the best money you ever spent because each lease is so different. And I'm not an attorney, so I'm not going to go through it. So, but that's my advice to you. Absolutely. Whenever I sign a lease, I always take it to an attorney. I'm talking about lease for equipment. Also, if you're looking for a lease, I think that's what you're asking about versus a real estate lease.
Thank you, Sue.
Okay, next slide. Okay, I get these questions all day long. Do you recommend using a commercial realtor if you already have a place in mind? If you can negotiate with the landlord's going to love you. And what you're going to look for, because he's going to save a commission or she's going to save a commission. When you go in to negotiate a lease for real estate and you have to have tenant improvements, the landlord usually has a fund for tenant improvements. Also, landlords are very accustomed to giving you free rent for 3 to 6 months till you can get your business up and operating. So look to see what's beneficial for you and ask for those items, especially if you're going to do tenant improvements, because in tenant improvements, you're beautifying their real estate. So you're paying to beautify their real estate. So you make sure that you get compensated for doing that. Also, when you're negotiating for a lease, make sure that the landlord's paying for the roof, they're paying for the heating and air, make sure all electricity works, the floors are in place, the walls aren't falling down, so you can do an inspection. But yeah, you can negotiate it yourself, but make sure you ask for some things for you. Okay, you might like the space, but the landlord they're very accustomed to giving 3 to 6 months rent, and also they usually have a pool of funds for tenant improvements. Okay, all right. Myth, SBA is a direct lender. They don't do direct lending for 7A and 504s. What they are doing direct lending for is the EIDL or the disaster loans. They are doing direct lending there. Do I have to go to 3 lenders and be rejected? That it used to be that way, like in 1990, but people are still asking that question. No, that is totally gone. And the interest rates, it's not lower interest rates. These interest rates are set by the SBA. They're very competitive with what commercial loans are. You'll find real estate loans a little bit less because it's secured to real estate. So you're going to find that probably at about 5%. First is on the working capital is 6%. SBA is not a subprime lender, which means you have to have good credit. They have a credit threshold that they will not go below. SBA loans are made by banks. Yes, they are, and non-bank lenders. There's 13 non-bank lenders that SBA has authorized to make those loans. So they're out there. Terms are usually longer. Yes, SBA loans go out 10 years. So that really helps with your cash flow versus a standard commercial loan is 3 to 5 years. So you're going to be paying higher principal and interest each month. Okay. And if you can negotiate also, if you're a startup, or even if you're already in business and you're looking to expand, you're getting an SBA loan, you can get up to 6 months interest payments only. You can ask your lender to do that. So you're only paying interest for 6 months so you can get your business cash flow up and going. They're very accustomed to that. The rate parameters are set by SBA and must be for a for-profit business under SBA 7A and 504. Now, under EIDL, which is part of the coronavirus pandemic relief package, nonprofits qualify for that. So this is the first time that SBA has really gone into the nonprofit business outside, because PPP can be for nonprofits, payroll protection plan loan, and also SBA has done it for their disaster loans. So this is new this year. So if you're a nonprofit, please do it. I know we have funded a lot of I funded a lot of nonprofits in the PPP in the newspaper organizations and in churches and in nonprofits across the nation. So it's a good way to keep nonprofits up and operating too. All right, next question. Next slide, sorry. Need my coffee. Okay, these are the 2 loan programs we're going to talk about. The 504 is for real estate, and then the 7A is really the workhorse. So on the 504 loan, this is for real estate. So let's say that you want to own your own building. This is a great, sorry, I coughed. What options for nonprofits? Nonprofits are PPP and EIDL for right now, but there's some commercial lenders that do loans, regular working capital loans for nonprofits. They're set up for nonprofits. And one of them is in North Carolina. More than happy to share that after. Send me an email and I'll share it with you. Okay, on the 504, that's for real estate. Also covers, for example, food trucks or just space. Food trucks, I wouldn't get a 504 for food trucks. And the reason why I'm going to tell you in a minute is on the 504 program, if you're already in business, you have a 10% cash injection that you have to put in to buy the real estate. If you're a brand new startup, it's 20%. On the 504, 40% of that loan is at a fixed rate. And that fixed rate is for 25 years. So, and it's sold on the debenture market. So right now that fixed rate is sold for about 3%. It's 2.94, 3%. The other 50% is at a bank rate. So you get a blended rate, but on the, and you have to occupy 51% of the building or close to it. You can eventually get there, but you have to get close to it. On the 504 real estate, you really need to start at about 300,000 is the threshold they like to start with because the paperwork is so huge and it takes such a long time. Plus in the 504, there's a prepayment penalty. And that prepayment penalty is a pretty big kicker if you sell it early or want to refinance it to another loan later on. So you've got to keep it at least 5 years for the prepayment penalty that doesn't bite you too badly. On the 7A, you can also use that 7A to purchase real estate. And it's shorter time frame to close the loan, and it's not as much paperwork. And that's where I would go for the food trucks. In fact, I'm funding a food truck probably tomorrow. So, and on the 7A it's a workhorse. It's working capital. You can use it to buy food trucks, you use it first and last month's rent. Whereas on the 504, it's for fixed assets. It's for buildings, it's for heavy equipment, it's for big machinery. That's where you'd use the 504. On the 7A, you'd use it for everything else. Let's say marketing. You can buy a building. I'm doing a building right now because it's faster, and the seller wanted it closed within 6 weeks. So we were able to close it within 5 and get it all through. You can also use it to hire, buy inventory, marketing, anything that you need money for in your business to make it a success. I didn't see the question.
The question, Sue, is the 7A loan, does it have a minimum, or can it be arranged for what you need? What are the min and max for the 7A?
Minimum, people want to start at about 25,000, go up to 5 million.
Lord.
The next question is from Jillian. For vacant land you will be building on, do you need a 504 only or the 7A for construction costs?
I would look at it both ways. I'd look to see what's most beneficial to you. I'd run the numbers both ways. And the time frame too, of when you want it done. On construction, one thing about construction that I want you to think about is when you have the construction, you're going to have a list of what is going to be done and the timeline, because they're going to fund that construction cost as the work is finished, because there's been so much fraud in construction. So you've got to make sure you've got your bids in and it is pretty ironclad on it. But it's done all the time. It's done all the time. If you're buying land also, one of the things that you're going to have to look at is what it was used for before. And if there's any toxins in, there's going to be an environmental report done on it. So you're going to have to look, that'll be there. And also an appraisal. There will need to be appraisal. So those two costs are going to come out of pocket for you too. So when you're putting together your plan of how much money you need, look to see if you need that reimbursed later, but you can use your appraisal costs and your environmental costs as part of your cash injection if you pay for that out of pocket already. So we can include that. A lot of lenders can include that. Some don't, some do, but that can be looked at. Did I get all the questions?
We're good to go.
Okay, all right. Also under the 7A, there's a lot of misnomers that people will go on the website of SBA and say express. I want an express loan. Express loan is a 7A loan, and the only difference is it uses the lender's paperwork, okay? And some lenders do them, some lenders don't, but everyone says, oh, it's express, it'll go so much faster. In today's marketplace, it doesn't go that much faster, and the reason why the marketplace is so slowed down is because of the stimulus, because of the PPPs that are all going through. So the marketplace has been a little bit slower. The Veteran Advantage, that is for veterans. It has to be 51% owned by a veteran. And what comes out of that is your loan is supposed to go through the system faster. Sorry, I need a cup of coffee. I'll lose my voice. Export Express. This is a great loan program, folks. If you've been in business 1 year or longer, and you plan to export over the lifetime of the loan. Yes, spouses of disabled veterans do count. So absolutely. Thank you. And so you've been in business 1 year or longer, you plan to export over the lifetime of the loan. What this does is SBA and the federal government really wants to make this loan. So lenders will go out of their way to make this loan, okay? So, and you just have to designate which countries you want to export to over the lifetime. There's a gal in south of Houston. I guess she calls it they call it the Bay Area, down by Nassau and all of that. She had great product. In fact, people wanted it, and we said, you know, made in the USA. We sent it out. It was doing well, and then all of a sudden, we put the label "Made in Texas." Her sales quadrupled, because Texas is bigger than life in some countries. So look to see what countries you are wanting to send to or ship to. Also, there's a great program with the Department of Commerce. It's called the Gold Key program. They will vet out who you're sending it to. They will, that you're going to do business with in that country. Also, they will let you use the US Embassy as a place to do business if you're meeting with the groups there. I know a lot of the trade programs haven't been going because of COVID, but Texas, state of Texas has some wonderful programs that go to other countries that highlight what Texas Made has. I've had several clients go on those, and the 7A loan can fund that program. When you want this, I funded several that went to Germany, and the Germans love things from Texas. They think J.R. Ewing is still alive. It's the craziest thing I ever saw. But it was a wonderful trade mission. They set it up so it's like a fair where you have the wares and the services that you're going to sell. India, COVID is really hard on India right now, so you can't go. But when it opens up, India is another huge market. And the reason why is they have an emerging middle class now, and they want to purchase what we have and we're manufacturing and making here. So think globally, think bigger, think globally. It doesn't have to be today. It can be in the next 3 to 5 years, but I want you to start thinking about. Okay, small lender advantage, that's part of the working capital program underneath SBA. And community advantage, that's programs that are done through nonprofits. It's the same criteria. You're gonna have the same paperwork and the same rules. On the community advantage, their interest rate their credit score comes down a little bit, but not by much. Since COVID, SBA has really kind of tightened up the credit score of things. Next slide. Okay, thank you, veterans. And this also, as the question said, for spouses of veterans, service disabled veterans, we were working on a big program for veterans to relaunch another lending program for veterans and outreach. It was, in fact, it was March 12th, 2020, and all of a sudden the world came to an end. So hopefully in 2021, 2022, we'll get it restarted again. So I will always keep the city of Austin abreast of any new programs that come out, because this will be another federal program. So we're hoping to get that back up and operating and launched. So I'll keep you all abreast of that. Okay, next slide. This is the Export Express. I cannot express enough. I talk about using a word too many times to take advantage of it. And the state of Texas has a wonderful grant program. Xavier, I don't know if they still have it. I know I've worked with it in the past, but you know, so much has changed since COVID. If it's made and grown in Texas, they have a wonderful grant program. I know several of my clients have gotten it in the past. Do you know if it's still around?
Not 100% sure. Definitely can check in on that as a question to be answered.
Yeah, the Department of Agriculture with the state of Texas had it. It was, yeah, it was a nice grant too. So one thing about Texas and people in Texas, they really take care of their own. So you're lucky to be there. I know we have a gal in Queens, I think believe Alexandra said she is. And New York has some great programs too. I don't know where they are right now after COVID, but I know I've worked with some of them. Next slide. Okay, now we're going to navigate the process. This is where all the questions come up. Next slide. Okay. I mentioned the community banks. Where do I find them? Referrals, nationwide lenders. People are out here. We can help you. Feel free to reach out to me with any question you have. And if I can't answer it, I will certainly find it. I've been on the kind of the cusp of what's been going on. So more than happy to help you. And as I said on the onslaught when we started, our goal, Xavier, the city of Austin, myself, is to make you successful. My goal is to make y'all millionaires. That's what I want to do. But we got to meet you. You got to meet us halfway. We can only do so much. And then the rest, you've got to run the rest of the relay across the finish line for the gold. Okay. All right. Now that I found a lender, what's next? Next slide. Okay. Capital is available. And it's available to start businesses. There's a big myth out there that startups can't get capital. That is not the case. Now, are some industries risky? Yes. And one of them is restaurants. I'm sorry to tell you, but food trucks aren't, because the beauty of a food truck is you're not putting so much money into brick and mortar, and you can start the engine and move to another place. So food trucks are still pretty active. As I said, I'm funding one right now. Because she can keep moving. And she's kind of a tourist, follows the tourists. But what's interesting, since we've had such a lockdown, locals are now tourists because they just want to get out. So be creative, be creative. That's the beauty of America and small businesses. We are creative, we're able to pivot, we're able to see what the marketplace needs, and we go after it. And take advantage of niche markets, because niche markets grows into big markets. You just never know where it's going to go. All right, next slide. Yes, answer to all those questions. Next slide. Okay. Debt financing. What you're going to look for is on the promissory note, because on a debt financing, there is a promissory note, which means the name of the business is going to pay this much money back on these terms. Open houses since the lines are so long. Oh, wow. That's great, Joe. Thanks for sharing. So the promissory note is going to set out the terms. Make sure you read all the terms. And one of the terms that I want you to look at is how often you have to report your financials. Make sure, try and secure it annually, because for small businesses to do it quarterly or even semi-annually, it's sometimes tough. And I don't want you to be out of compliance with the promissory note, because they can call your loan if you're out of compliance. 9 times out of 10, they aren't going to call an SBA loan because there'll be too much repercussions because the government's on your side. But make sure, that's one of the big things that I see a lot, is when you, on the compliance side, when you have to report your financials. Okay, fixed credit formula that sets the borrowing based on a percentage of receivables or inventory. That's if you're doing, if it's set up there that you have to give some of the money back. If on the accounts receivable, they're coming in and out. I've got one right now, we're renegotiating it. Statement on how the funds will be used. You're going to certify how you're going to use those funds, because if you're using some of those funds to buy equipment, 98% of the time, that fund, they are going to cut that check to the vendor of the equipment. Okay, no problem. I'll take that one later. Okay, the collateral description. If, as I said earlier, if they use the funds to buy equipment, they're going to file a UCC, which means they have first right on that piece of equipment if the loan goes under. Okay, so you'll see UCC filings on that. That's their security. Personal guarantees, as I said, anyone over 20% is personally going to guarantee this loan. What they're going to look for is the business to pay it back. Then the personal guarantors are next in line to pay the loan back. It's very similar to a student loan. Look at the interest rate, and if it's an adjustable, when it adjusts. Is it adjust when prime changes after 3 months, or is it just on an annual basis based on prime? Look to see what's in there. Also look to see what the fees are charged by the lender. 9 times out of 10, you can wrap the fees that are charged by the lender into the loan. So make sure if you're short on cash, I highly suggest you do that. The time period of the loan, make sure there's no prepayment penalty, because the longer the loan goes out, it's easier for your cash flow. But what you want to do is make sure there's no prepayment penalty on any kind of lending you get. One person forgot to read what the contract was, and she can't get it out of it for 2 years. And it's like, what? So that was kind of interesting. So I've been trying to help her get out of that. As I said, reporting requirements, and then representations and warranties, if there are any. Usually in SBA there are not, but you just never know. Make sure you read the fine print. As always, in anything you do, you need to read the fine print. But the key items is you want to make sure on the reporting and the interest rates, if it's an adjustable interest rate, when it's adjusted, and how long the loan goes out. So without any prepayment penalties. Those are the 4 top things I want you to keep in the top of your mind. Okay, next slide.
We have a question in the chat from Luth. The
Yes.
question is, our nonprofit project has been growing rapidly. What's the best way to fund it so we can get space to grow? We've built up a resume of media coverage, but don't know how to leverage that for funding.
Well, what we're going to do on that one is we're going to go to a lender who does nonprofits. And so when you see my email, shoot me an email and I'll give you a couple names of lenders who do it. Okay. Okay, how long does the process take? I get this question 49 times a day. Right now, it's slow because of the PPP, and PPP's over in the end of May 31st. So everything is jammed up to get it through. So right now it's taking 6 to 8 weeks to get through. If you're missing any documents, it slows things down. Or if something comes up that no one anticipated, that also will cause some headaches that we need to resolve. PLP lenders can get, what that means is that they have the authority to sign off on the loan within their SBA department. So it goes much faster. If that loan has to go to the SBA processing center, sometimes lenders with PLP send it there because there's some gray area that the underwriting team is not comfortable with, or some lenders aren't PLP. So you have to add an extra 2 weeks right now for that. So that would take probably 10 weeks to get through. And what happens is once the loan is approved, then we have to send it through the SBA loan portal. And this is if it's done in-house through PLP. And then the SBA gives us a loan number, and then we have to fund. That has to be funded within 10 days. Those are the rules. And that means getting all the promissory notes out to you. It's coming DocuSign now. Make sure you read it all, you sign it all. PLP is a preferred lender program. That means SBA has given the authority for a lender to do all the in-house underwriting versus having to send it to SBA's offices and have their underwriters do it. That's what it means. So that the lender has 10 days once they get the loan number to fund. Okay, so that's the process. So count on minimum 8 weeks right now.
Sue, could we get the, for the acronym PLP, what does that mean specifically?
Preferred lender program.
Thank you.
Mm-hmm. Next slide. Okay. This is what's hot right now. So if anyone hasn't applied for the PPP, please do it. If you haven't applied for PPP number 1, you can apply for PP number 1. And once it's funded, you can turn around and apply for PPP number 2. Okay. So the business has to be in a business February 15th, 2020. Some lenders are requiring to see a bank statement for that, but that's up to each individual lender. And if you receive the first PPP, you're entitled to the second PPP. The business must be located in the United States. You need to have 2019 taxes. Yes, you do. You have to have 2019 taxes because they were already due. And you can only count business income in the United States. Now, on the tax returns, no, you can have 2020. No, you can have 2020 tax returns because remember the date started on February 15th, 2020. So if you have 2020 Schedule C, absolutely. Or if you had payroll, if you have your 940s and 941s for your 2020, you're eligible for PPP, absolutely. Now, it's gross payroll for $100,000. If you're using your Schedule C, what it is now underneath the new stimulus bill is they take your Schedule C and line item number 7, which is your gross income. Prior, it was your net income. So now it's your gross income on line 7. So it cannot be more than $100,000. They're going to cap it at $100,000. Let's say you have $175,000. They're only going to allow you to $100,000. And on the payroll, if you have 941s and 940s with people that make over $100,000, they're going to cap it at $100,000 for the payroll too. Yeah, if you're a single person without any payroll, if you have a Schedule C, they'll take line item number 7 on either your Schedule C 2019 or 2020. I didn't see that last question, Xavier, that came up. It went down too fast. Okay. All right. Now, this loan is forgiven. If you use 60% of it for payroll, and that means paying yourself. The other 40%, you can use 100% for payroll. Make sure you document that you are using it for payroll. Now, if 60% minimum has to go to payroll, the other 40% could go for utilities, rent, COVID expenses, or normal operating expenses. Keep track of it for the forgiveness if you want it forgiven. If not, it's going to be 1%. In February 20, can I use my Schedule C from 2019? Doesn't. Well, if your business was started in 2020 and this is what you're using, then we're going to have to use your 20, as long as it was started before February 15th, or if you have a bank statement through the end of February for 2020, then you can use your 2020 Schedule C. Okay. Now, if you're going for a PPP number 2, you have to show a 25% decrease in revenue, gross revenue over 2019 has to be 25, 2020 has to be 25% less than 2019. Okay, and you can compare quarters. It's got to be the same quarters. If you are want to do it annually, you can do it annually, but you just have to show. And how you do that is it's gross revenue. So you show where the difference is, and then you sign out. You have to sign that this is true. All you do is do a comparison on a sheet of paper on Excel spreadsheet and sign it that it's 25% less. Now, on your first PPP, you don't have to, but to qualify for your second PPP round, yes, you do, okay? And now if you're in business less than a year, you must compare the same quarters, okay? And then it talks about entities not in business, how you need to do it. And then also, when it starts in before February 15, 2020, what you have to do to show the differences on all of that. So it's pretty plain, it's pretty simple. On the application, make sure you put in you put in the month and date and year the business started, and then make sure that on lines 5 and 6 in the middle of the application, you initial those items, okay? Fill in everything. If you do not fill in everything in the application, it slows it down, it gets kicked back. And what you're going to have to do to support it, to support it all is you're going to have your Schedule C, if you're applying for your Schedule C, the completed application, copy of your driver's license, the business bank statement. And if you bank with Chase, they will not let the money go into your personal account. You've got to have a business bank account. They put a freeze on it as of last week, I was told, because I got a couple phone calls on it. And then there might be a chance that you might have to have your bank statement for February 2020. So make sure that you have those items, and there's still time to get it in. I mean, this is a once in a lifetime opportunity. It's helped so many businesses. Don't let this time go by. It's amazing because when it stopped last time, they gave it a couple extensions, but when it stops, it stops. One person missed it and they kept petitioning, and SBA would not budge. There was nothing anyone can do. So make sure that you don't let this go, because it's a great opportunity for your business, and it can be forgiven if you follow the rules correctly. Just follow the rules. Then the forgiveness will come about, the deadline for PPP is 5/31, which is the end of this month. So you need to get it in quickly, because I just don't want you stuck. I saw it and heard it so many times. I've been very involved in the starting of the PPP and the forgiveness part of it. So yes, I work very closely with Congress on this entire program. So please make sure that you don't let it go away. So if I funded myself, but I didn't file business tax, I just worked and used my personal income. Got to have a business tax. This is a government program. Got to have a Schedule C. Well, you can do your 2020 Schedule C. It's ready now. Yeah. Can I apply as a sole proprietor consultant, but I'm filing taxes in my own name? Yes, you could, because you're going to have a Schedule C. So make sure you have that up and operating. Oh, I was going to say next slide, but I'm going to wait. Okay, next slide. Okay, these, for all you restaurateurs, as of yesterday, the portal opened for the Restaurant Revitalization Program. This is what you can use it for. So restaurateurs, we fought long and hard to get this program up. Please, please, I know Austin is a foodie town. I want you to be able to go after this. Restaurants, food trucks. I know someone had put in a chat question on food trucks, food carts, caterers, bars, saloon, lounges, taverns, snack and non-alcoholic beverage bars, bakeries that are open to the public are eligible, brew pubs, breweries, wineries, inns that have food, and facilities licensed to sell and produce alcohol that are open. This portal is open, and please use it. It is a grant, okay? And the calculations are the gross receipts minus 2020 gross receipts minus PPP. You can't include your PPP in this. So please go after it. And you can use it for your business payroll costs. Yes, it's for businesses in 2020. It started in 2020. I'm sorry. And business utilities, maintenance expenses, construction, outdoor seating. Yeah. And so please use it. There's also the Shuttered Venue Operators Grant that started about a week ago. What does it? So it's not for startups. It's for startups if you started in 2020 or before the pandemic hit. That's what. So yeah, see, anything under 2 years is considered a startup in the SBA world. Okay, the Shuttered Grant Venue Operators. This is another grant. It's up to 45% of your gross earned income. And this is for promoters I know you've got a lot of entertainers in Austin, so please get the word out on this. They're eligible for this, and it's a grant. You're not going to get anything like this ever again. So please, museum operators, zoos, talent representatives, the lighting and fixture guys, it's all there. Now on the SBA revitalization, it had an issue yesterday because it started yesterday, and so it was overloaded. So today it's working much better. I just got a text that said it's back up and operating. You are going to have to show your documentation for this. You just can't go in. There's an application form. There's a process that you have to go through. They have to because of fraud. There's just no way around it. Fraud has caused so many issues right now that that they've kind of put in big parameters. So if it gets kicked back, don't worry. There's hold codes on it, but don't worry. It will. We can undo the hold codes. Okay. Next slide. Go do it. Please don't procrastinate. You're never going to see programs like this again. We fought long and hard to get them. You have, I mean, it's what I was not going to let Main Street be forgotten as they were in 2007. Worked really hard, bipartisan. I mean, when we were doing the PPP, we were up to 2 and 3 o'clock in the morning to get it through, to make it all work. Oh, yeah, I'll discuss EIDL. Thank you. I just thought everyone knew about it and I didn't want to be redundant. Okay, EIDL, you go into the SBA website. You can do it online underneath coronavirus. The EIDL is up and operating. There's money in there. They've increased it to 500,000. So if you've already gotten the EIDL at 150,000, you should have gotten an email from SBA that said, would you like to go in and do a reconsideration for up to 500,000. So what they're going to do is, let's say if you got 150,000, they'll give you another 350. So please go in and do that. And if you don't have the link, we will send it to you. And on the EIDL, that's an interest rate of 3.75 for up to 30 years. It's probably going to be up to 25 years. The advance process has stopped unless you got an email from SBA and you were in a targeted zone. Then if you were in a targeted zone, what do they base the maximum amount for EIDL? They have an internal formula. What they do is they look at your gross. When they did the first EIDL, they took it at 6 months. Now they're taking it out to 24 months. So you'll get more this time around because the pandemic has lasted longer than anyone anticipated. Okay. So look at that. So on the advanced targeted, so if you got an email and you're in an advanced targeted area and they're doing the advance that you don't have to pay back. So let's say you got the first one and you received 6,000. There is a chance that you can get it increased another 4,000 to equal the amount of the $10,000. So double check your emails, double check your spam file to see if it's in your spam file. Now, a new one came out on last Thursday, another targeted one for an extra $5,000 if you're in another targeted area that they've deemed that low to moderate income area. But you have to receive those emails from the federal government on that. So double check. And if you haven't, then I would go on the SBA website and look at the maps and see if you're in that targeted area, because instead of the 10,000, they'll give you an extra 5,000 up to 15,000. And literally that started last week. And Xavier, I can send you some documentation on that if you would like, and you can post it your website or however you want to do it. So people have access to that too. But yes, the EIDL is a great program. You have to use it for business expenses. You can't go take a trip. You can't buy another business or pay an existing SBA loan off with it. Yes, the email's from SBA. It'll say, yes, and it'll be a reference. If you already have an EIDL, it'll be a reference to your loan number or your application number, excuse me, your application number of the first EIDL that you received. And you can't use it to buy another business. You can use it to pay off debt other than an SBA loan if the debt is in the normal course of your business.
Sue, I have a question from Chelsea regarding the Restaurant Revitalization Fund. Is it a loan or a grant?
Grant. Grant, 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 grant. Don't have to pay it back. That's free money. I shouldn't say it that way, but it is. Because we've got to get these restaurants back on track. You're a big part of the community. You have just been devastated. I mean, Matthew fought long and hard for this in Washington, D.C. I mean, yeah, we can't have entire blocks full of restaurants and shut down. We've got to get you back up and operating and running. You're a vital part of the American economy. We just don't want you left out. Can't all go to Wall Street. It's got to go to Main Street. That's my philosophy, and I'll fight to the very end on it. They can't fire me. I don't work for them. All right, next slide. Okay, don't procrastinate. Put a strategy together, execute it, and success. Next slide. Okay, just make it happen. And then the next slide, I'm going to open up for questions. It has all my content. Oh. Takeaways. Do you know how long they will accept requests for additional EIDL money? No, I don't, probably till they run out. One thing I also want to talk about is, I failed to mention it earlier and I apologize. When you're applying for a 7A loan for SBA, they're paying 3 months principal and interest right now until the money runs out. They have $3 billion in the coffers. We kind of anticipated that it will be there until July. So I highly suggest, if you're thinking of starting a business or expanding a business and are looking at a 7A SBA loan, apply now so you can get that 3 months of free. Also, the other item that I want to mention is SBA is paying all their fees during this time also, which add up to quite a bit, especially if you have a big size loan. Also on the EIDL, they're deferring it until 2022. There's going to be an 18-month deferral on it. Don't let that go, because that will give you enough time to get your business's cash flow up and operating and put enough money in the bank. So when it does come due to start paying, you'll have the money to start paying. Okay, money is available for small businesses. That includes startups. Also, the EIDLs out here, the PPPs out here, the grants for restaurant revitalization, the shuttered venue. I mean, these are huge, the amount of money that's going out to them. So please look at those. Don't procrastinate. I said, I'm going to do it another day. Do it now, because you just don't know when the funds are going to run out. And EIDL before, the funds kept running out. So that's why they capped it at 150. Or they were dragging their feet so long and saying, oh, you didn't qualify. So I was telling everyone to do a reconsideration. If you get a no, go back in and say, I want this loan reconsideration. Why was it denied? If it was denied for credit, which I've seen before, because you have to have a 570 for the minimum for the EIDL. Okay, so go in and get that credit fixed, because that'll take you it should take you 45 days minimum to get it turned around so the credit bureaus report it correctly. And then go back in and do a reconsideration. People have gotten it on reconsiderations 2 and 3 times, because you send in the documentation, you tell them a little bit of story, you do a write-up of what you've done to correct it, where you are right now, how you need this loan, and how your business will be able to pay the loan back. They want to see the loan's going to be paid back. So don't let the first no stop you. Put in for reconsideration. Lots and lots of people did reconsiderations, and that was one way how they slowed the process down last time. So I just don't want you to left out on all these funds that we fought so hard for. Never give up. Never give up. There's funds out here. That's the beauty of being a small business owner, is you have the tenacity and the ingenuity to go do it. Otherwise, you wouldn't be here. You wouldn't be in where you are right now. And make sure the pricing of your money is correct for you. I've seen so many people get turned around with these high interest rate loans. I mean, I've seen people lose businesses because of it. Yeah, I know it's easy to get into to grab that money. It starts out small. Oh, I can afford a 15% interest. But by the time you're done, as I said earlier, it's compounding, compounding, compounding until it's 150%. That poor woman that was shot at the Capitol, she was a woman veteran. And why she was there is because she was paying 150% in those loans. And she was coming to protest. She was out of San Diego, and I sit on a board in San Diego. And she was coming to tell her story, and, you know, so please, please, please be careful on those loans. I cannot iterate it enough. I've just seen too many sad, sad, sad stories. Okay, next slide. And together we are better, and we are going to make it better. We are going to make it better. Any questions? Those are 2 business owners, by the way, that did that.
Thank you so much, Sue. And I encourage, we've got just a little bit of time. Actually, we've got about close to 15 minutes remaining for any additional questions, or maybe a deeper dive into a previous question. We've got some time for that as well. Or if there's any questions for me, please feel free to pull it in the chat. But let's take some time now for your audience questions. I have a question, Sue. You know, one of the things that sometimes having experience with lending specifically, could you help us kind of really delineate the difference between investors and lenders? Because sometimes, you know, I'll have individuals that are seeking financing, and the perception is I just need to convince this lender of how successful this particular business is going to be. You know, what's the percentage here, narrative versus numbers? Could you help provide some guidance on that?
I'm sorry, I was reading a question. I'm sorry.
That's all right.
Guidance on what was the question? I'm sorry. I won't read.
Yeah, well, just to kind of do it more succinctly, you know, I always tell people with respect to lending versus, you know, versus investment, it's 90% numbers, 10% narrative. And so while a great story is important to the history and the origins of the company, lenders are looking for the numbers. Can you opine on that a little bit?
Sure. Yeah, lenders are looking for the numbers. They're looking to see if you can pay the loan back. So what they're looking at is your cash flow, and if it's a startup, what your cash flow assumptions are based on. You just can't pick them out of the air. As one person said, he came to me for a loan, and I said, well, where'd you get the numbers? He says, well, I just picked them up out of the air. If you don't like them, change them. I said, no. Do a little bit of research. Find out what somebody else in the area that you're going into is making. We've got Google now. We can look up just about anything in the whole wide world. So look to see what those assumptions are based on, especially on the debt side of things, because that's what we're going to base the loan on. And to me, character is huge. So I want to know who I'm loaning the money to, because I want to be paid back. I'm not in the grant business. The government could be in the grant business. I'm not in the grant business. So I want to be paid back. So in your story, in your write-up, I want to know about you. I want to know that you're a good steward of money. I want to know that you're going to be, that you have the wherewithal to pay it back on the debt side of it too. And I want to see that those assumptions are real, that they're just not, well, I think this is what I'm going to do, that I'm going to maybe make this. No. And then on the equity side of it, we're investing in your company. So we're investing in you. So I want to know about you. I want to know that you're trustworthy. We went around to the 100 top VCs in the nation and asked them what they look for in all of the people that they fund. And the top 3, can I trust the founders? Can I trust the founders with my money? Can I trust the founders with what they are going to do? And where is a third-party validation on their trust? So let's say they're a leader in CASA, or they're a leader in the Red Cross or something. Let the person that you're presenting to know on that. And then on the equity side, if you're doing a deck, 15 slides, 15 minutes, okay? Because the first round is you want to be able to get into the second round. You want to be able to be asked back. Then the next round, you're going to have much more in depth about what the business is, where it's going, all those good things.
Thank you, Sue. I think there's a question in the chat on, could you provide just some clarity on which loans you can apply for as a startup? If you could just repeat kind of that inventory of programs.
Sure, I know it's kind of crazy right now. If you're a startup and you started before the end of February 2020, you're eligible for the PPP and the EIDL, and both PPPs, PPP1 and PPP2 and the EIDL. You're always eligible for the SBA 7A program and 504. You're eligible for all of that. Now, if you started after, you started March 1st, 2020, then you're eligible for the 7A loan, the working capital loan, and the 504 loan.
I'm typing this in the chat so that everybody has benefit of the information. Thank you. The next question is any recommendations on loans or grants for a brand new fitness startup in Austin, specifically?
Well, you're not going to get a grant for a brand new startup. No. So for a brand new startup in the fitness, yes, you can certainly put together a package for the 7A working capital loan. One thing that I want you to put in that package, what makes your fitness center so much better than all the other fitness centers? Because we had so many fitness centers closed during the pandemic. The good news is you're in Texas, so you're more of an open state than a lot of other states. So, have to show why you're different, how you're going to be different, and if another pandemic hits, how you'll be able to maneuver through it. Those are the things that you're going to have to hit upon, but absolutely go for a 7A loan.
Thank you, Sue. There's another question in the chat. Is there a standard length of time that new business owners take to pay back their loan? I think said another way, what's the standard term for a loan, for a business loan?
The standard term for an SBA loan is, depending upon the lender, between 8 and 10 years. I always go 10 years because it's easier on the cash flow for the first couple years, especially if you're a startup, for the first couple of years, so you can get the cash flow up and moving out. So try and go 10 years because there's no prepayment penalty. I'll make sure there's no prepayment penalty, but go out as long as you possibly can for the cash flow.
Thank you, Sue. Are there any other questions from the audience for Sue? Got just under 10 minutes left.
I was so worried that I wouldn't get through it all. Do we have any restaurateurs on the call?
We definitely have one, yep, two, yes,
Are they in business already?
not yet. So it looks like,
Okay.
from the chat, looks like folks are just starting out.
Just starting out, okay. Okay, for all of you restaurateurs that are just starting out, you're gonna really have to talk about, if another pandemic came, how you would be able to be successful. So I would talk about outdoor dining. I would talk about delivery. I would talk about, I know someone had mentioned a truck. I would talk about a mobile cart. I would bring up all of those things versus just talking about a standard brick and mortar, because it's going to be harder to get through the process if you have a standard brick and mortar operation. So I would talk about how you can take the food to the individuals, to the homes, Grubhub, all those kinds of things, what you're going to offer to make yourself different, and make yourself adaptable. Those are going to be your key items that you're going to have to hit upon.
Thank you, Sue. And before we close out, Sue, is it possible that you could place your email in the chat for a follow-up post session?
Yeah, next slide should have all of mine.
Fantastic.
And I think there was a question that came through. How can we find information about funding our brand new business? You can find it, well, City of Austin, you have programs on funding brand new businesses. Do you have some coming up?
We actually have classes just like these to get folks where they need to be with respect to having the materials ready to have a successful loan application process. Additionally, we have a local lending program, does require at least 2 years of existence for consideration. But we definitely work with area partners, including nonprofit lenders, local lenders, to identify what a good fit might be for that particular applicant. As I believe you mentioned, Sue, earlier in the program, because there's such a variety of need and individual lenders that angle on how they fill that particular need. That's why there's so many institutional and local lenders. If there was just one way to do this, there'd only be one lender and everybody would make it, it'd be a very simple process. But luckily, there's a tremendous amount of opportunity as well as diversity in lenders. And so really it's just trying to find a lender that fits your specific need. Absolutely.
That's absolutely key, because some just don't have the wherewithal or the knowledge to do it. And Austin has a very, very robust entrepreneurial spirit and community. I mean, I'm in all 50 states, and it's one of the top, if not the top. And they're there to help you succeed. I mean, it's just truly amazing. There's a couple of questions that popped up.
Yes, and while you're real quick, Sue, while you're reading those, I just wanted to remind everyone regarding the survey. Again, these sessions are provided at no cost to you, but for us, your feedback is very important and valuable. So please take the time to complete that survey so that we know how to customize the sessions and invite Sue back for another session into the future, so that we know what information is valuable and what information is relevant to you today. So let's get back to the questions. We have a remaining 5 minutes. We should be able to knock these out as well. The first one that I saw pop up since, let's see here, let's go back. Any recommendations for a loan in which it will take several months to gain a client? More time to generate a PO, 90 days to manufacture, deliver an invoice for net 30 client.
There are some ways. Yeah, I would have to see it, but I think we could do 2 or 3 different things to make it all work. I've done this before, because sometimes it's just not one financing piece that works. Sometimes it's 2 and 3 to equal the whole. Yeah, I'd have to see your timeline, and if your product's being manufactured overseas, Everything has been, and it has to be imported here. Everything is slowed down to a crawl. So I'd have to know a little bit about it, but I think there's a way that you can do it if it's going to take you that long to secure the client. But I've got to see the entire timeline and how you have it broken down, because there's always going to be glitches. It always takes longer than everyone anticipates. So feel free to contact me and we can talk it through. But there are ways that you can do it.
The next question, Sue, is since we, let's see here, in reference to grants for Texas-made items, where can that be found? Christina, I believe, but I'll double check and I'll redrop it here in the chat. There's a link to the Agriculture Department for the state of Texas, and they do have a variety of robust grant and lending guarantee opportunities that are, I think, are good resources to check out for locally made items. So I'll drop that back into the chat for everyone's benefit. Thank you, Christina. Gina asks, where can you find clear instructions on PPP-1 and PPP-2 loans? So I thought webinars now available at the SBA websites to help people guide through common questions. Is there not?
Yes, there is. And you can go to their website and do it. It's pretty simple. The program, they made it as simple as possible on the PPP. Yes.
Question from Jad. For me, does the city of Austin have resources on the Export Express program Sue mentioned? That's an SBA specific program, but we can definitely share the link for that program. And if you really want a more robust or in-depth conversation specific to your company, Sue's information is up, including her email address and telephone number for future reference. Let's see here. I'm trying to do, is there someone I can explain what I'm trying to do between two businesses? They gave me free advice on next steps, filling in gaps, working on something every day. You know what, Sierra? I think that is a great list of questions to direct towards the city of Austin. We have a small business program here locally that is very successful and helping individual business owners really kind of organize their thoughts and focus their efforts on creating the most successful, stable model that they can produce. I would encourage you to contact our offices here locally at the City of Austin. And I believe the email address has been posted in the chat as well. And we can get you started on your journey to kind of organize and really kind of focus some of these energies into having, whether it be one or two successful businesses going forward. Let's see here. And I think, one last question here from Tyson. I'm a manufacturer that just moved to Austin from Huntington Beach. Welcome, Tyson. Where I had to watch and stress out on the containers on the water. Oh, okay. It's a comment from Tyson. Sorry that stressed you out. I could imagine that's probably pretty stressful in a year full of stress. Fabiola asks, can the business loan help pay for your personal bills, such as rent, car payments, until there's consistent cash flow for the business? I think that's Sue, I think it's pretty clear.
Yeah, what you can do is if you are already in business and you pay yourself, okay, pay yourself out of your business because you know you have your business so you can earn a living, but you have to set it up as a business and then paying yourself for as you normally would. You just can't start paying your car payment out of your business checking account if you haven't done it in the past. You've got to have a business and personal, and everyone knows that you've got to live. So pay yourself a salary and or a dividend or an owner's draw and put it into your personal account and then pay it out of your personal account.
Thank you so much, Sue. We really appreciate you, your expertise, and your dedication to the small business community. I want to thank everyone today on this session for joining. And for some of our late joiners, we're looking to have the video content made available as soon as possible. We appreciate you taking the time out of your schedule and starting your business and growing your business here locally to take time for this particular session. Be sure to visit our website for more classes throughout the week, as well as helpful coaching opportunities that we do daily for the next week. We're going to be doing that Monday through Friday from 1 to 2 p.m. You can register online. Again, thank you again for coming. We look forward to seeing you next time. Everyone, wishing you a wonderful day and stay healthy. Thank you again, Sue. I appreciate it.
Thank you all. And City of Austin, you're the best. So everyone that's living there, you're so lucky. Take advantage of them. They're great people. They've helped so many small businesses. They have so many success stories. So thank you all.